All right, so let's jump into things with a bit of a weekend sort of review. And where we at now? It's almost about 20 to 11. So yeah, not too bad. And that's give us a chance, obviously, to do a bit of a recap of how sort of last week's Friday session sort of ended up, and sort of do a bit of a map out and a bit of a plan out for what we can hopefully sort of expect in the coming week. And we've got a couple of busy weeks coming up now because US CPI sort of coming this week, and I think FLMC the week after that. I think it's the 18th, so 10 days or so till that one. So these are going to be the big things, and you're going to see a lot of sort of jostling in prices, mainly with our metals, with USD crosses, these kind of things, as the market really tries to sort of piece together what sort of bits of information they can to make their best assumption as to sort of what the Fed are going to do. And not only just what are they going to do, but what is that going to have in terms of implications across the whole market? Because those flows are going to sort of be impacting absolutely everything. As we know, US dollar, like DXY, is just the driver of things. So, you know what I mean? If we sort of see things sort of turn a bit sort of pear-shaped in that, we could see sort of risk take a bit of a hit. Obviously, with DXY also taking a bit of a hit. So we could be seeing sort of some sort of flows into the other safe havens. I mean, we know JPY is coming back pretty strong, and that's certainly something that should be on your radar. I don't follow the Swiss franc so much, but of course that's another one of your sort of typical safe havens. And despite all things in that, with how the weekend ended up, or the week ended up, gold, obviously, and I'll get onto gold because gold's quite interesting at the moment, and I think certainly some definitely some little games and that sort of happening there with at the moment. So see what we can sort of pick out with that. But look, I'll start off with Aussie because obviously Aussie's like the one of the main ones that I sort of trade, and we just got an absolute hammering down on Friday night, which for me is not too bad because if you've been following along with any of my sort of stuff, you know that I've been on the short side for the last couple of weeks after sort of coming up through this wedge break into this sort of high time frame sort of resistance area. We were due for a bit of a pullback. We had the sort of DXY. I know Aussie's not part of the DXY. I feel like I need to say this every time for some reason, but regardless, we saw US dollar buying across the board was bound to have a bit of a sort of push, and it did happen. And Aussie's been taking a bit of a clipping, among other sort of pairs as well. But as I said, right here and now, Aussie's what we're looking at. All right, so with Aussie, we've got a couple of things happening here. So if we look at the sort of full move and we drag it out from the, we'll see if it looks any clearer on the daily. On the daily, from the lows, this was back when we had that sort of complete sort of meltdown. Let's just drag this over here for the fun of it. This is actually, let's get rid of it. We know it's bounced up 7%. That's good. This was the move from a couple of weeks ago where everyone was sort of going, oh, look, the world's over and that, and, GFC 2.0, yada, yada, yada. And look, admittedly, it had been absolutely getting a pounding. I mean, what's this, sort of like 2 3 weeks or so, like maybe two weeks straight here, a bit of sideways, just culminated in an absolute capitulation, basically. That's what it is. And that's sort of coming down the bottom here, took out those sort of lows from the wicks. I mean, we all know this happened. Anyway, that's what gave us our low. We've seen an incredible bounce. As you saw 2 seconds ago, I just deleted it. It was like 7.5% that it bounced off the lows right back up to the highs, took out the high of where we were back in July, just before we had this big sort of sell down. So now we've got a low, now we've got a high, and we can sort of comfortably start to look at where uh, our retrace is coming to. Because, it's gone from a low to a high, and now it's sort of coming back. We had 38% at 66.40. Still hasn't come back. And remember, this was a bit of a breakout area. If we jump back onto the 4 hour, if you look at the videos around, this week here, which was, what's this, 13th, 12th to the 15th or so of August, the videos there, I was saying 66.40, that's the level. Once we break that, we're going to be hammered. We're going to sort of rip up. And obviously, as you can see, it did. And I mean, the immediate reaction was very strong. A little bit of a pullback, and again, and so you drive through. But we never got the retest of this. And generally, structurally, with breakouts and that significant level breakouts, you want to see retests. You want it to sort of go up, come back, that's right, and put in a higher high. Never really got that. And just, this was a lot of sort of squeeze action of sort of people that were shorter. Because remember, you had this big drop down here. You had a lot of people probably piled on. Oh, if we break this low over here, we're really going to be going down 62, all this kind of sort of rhetoric, and it didn't happen. And as you can see, these kind of moves through here are a bit more sort of squeezy because there's just no option for people to get off and then hit some levels, yada yada. We can see all that. So where we're at the moment, we're back here almost, not even yet to the 38% retracement mark. And in terms of sort of Fibonacci and retracements and this kind of stuff, 38% is still considered somewhat a bullish, well, it's not even somewhat, it's still considered a bullish pullback. It's not sort of like, you're coming back. I mean, 61s we've seen happen a number of times, and I've covered them a number of times. So these are levels in which you can see. And look, we could possibly still see this. If you look at the RSI here, this is on the 4-hour, that's looking horrible. Daily's getting down here, but I did say this the other day. We've got a little bit further to go before we could potentially see a little bit of a swing back up to give us our next leg, but I'll get onto that in a moment. But yeah, we just sort of saw it come down here. Now, I've been saying sort of, obviously, been wanting to be short through these periods down here. Even as we popped up here, I sort of actually hammered a couple of shorts into it. I got excellent entries like 60s and 63s or something like this. Obviously it didn't sort of carry the full amount all the way down, but that's not my style. I get in and out, in and out, in and out, and capture it coming down here. So look, I mean, I don't really sort of talk numbers so much on this, but it was probably one of my, I think maybe the second. No, probably not. I don't know. Top 5 weeks that I've probably ever done. Just sort of with this sort of move, particularly sort of coming through this last part here. So yeah, Aussie has just been absolutely sort of taking a bit of a walloping and that into the end of the week. And you've got to sort of think, okay, where is it back? Okay, it's back into, yes, this little buy zone that we sort of set up here, which, is it really a level now that if you sort of look at it, it was mad congestion through here. There's no real significance of it. It was just sort of like a little bit of a chops fest on the way down here. But again, this is just for a couple of hours. And that was pretty much over, the end of 1 week, start of the next. So sort of, the last couple of hours, you don't really think so much. So we could potentially be seeing similar sort of thing just here. This could just be sort of like a little bit of a last couple of hours of the week sort of sit on the lows, consolidate, and come back down a little bit lower. So I wouldn't be too quick to sort of jump at the camp to sort of say, yep, okay, that's it, there's the bottom, and now we're going to be moving back up. I would definitely say, with even a structural breakup, we could sort of definitely see a little bit more downside. As I said, this is why we have the price target here, 66.40, because this was the the big breakout level. We haven't seen that yet, so we're very close there. I think we got, what did we get to? We got to 59 on Friday. We're only sort of 20 points off from those lows there. It bounced up a little bit into the close where we are at 67 now. So, I mean, it stands to reason that, we could definitely come down here. And 66.40, as I've been mentioning, is where, these kind of zones through here is where I wanted to get long. Because I do believe, if we go back to this, that this is the pattern that we're sort of going to be looking for. I think that this bullish move back up here from the lows. We've got a bit of a pullback here. I think this is going to somewhat find itself a little base, and then we're going to see this push minimum to coming up to here to go to 68. But if we don't break through there, we'll find, we'll deal with that then. But I do believe that we are going to have this move here coming over the next week or so. And that's basically going to be, you got to look, what would the catalyst be for that? Well, the catalyst for that would be the rate cuts happening in the US. And the thing is with that, they're talking about 25 basis point, they're talking about 50 basis point, and that's fine. There's actually sort of different implications, as I mentioned earlier, just in regards to what that'll do to risk. But sort of certainly cuts are still coming, and you will get some sort of appreciation from the crosses of US dollars just based off that. As to sort of how far it goes, well, that's what we'll sort of get into in a little bit. So the sort of thought at the moment with the US is, as I said, 25 basis. It's not about sort of are the cuts coming. The cuts are coming. We know that. It's going to be 25 base points. It's going to be 50 base point. That's the discussion now. And if you look at the two camps, 25 base point, not as drastic for US dollar, but in the overall grand scheme picture, it's not as drastic a measure as the 50 basis point. So the 50 basis point really sort of portrays an idea of really it's just it's panic stations, it's fear. It's like, oh, the Fed's behind the curve. They've got to really do something to sort of pump up the US economy and that because, if they don't, it's actually just fully going to crash and burn. And this is what people call hard landing. I mean, just think about that. They're going to crash and burn. That's a hard landing. So cuts are coming. That's fine. We know that. That's whatever, and that the markets come to accept this. There's no shock with this. Most central banks, except for the RBA, are all talking about cuts anyway, and most of them are actually already cutting. So it's no sort of like, oh my God, they're cutting, but wow kind of thing. But as I said, the 50 basis point will probably be more detrimental, even though in theory that would weaken the US dollar further, because Aussie is a risk asset. That'll actually affect the outlook on Aussie because you'll also see equity markets probably sell off, and you'll see money flow into those other safe havens. Now, Aussie is a risk asset. It runs off not only weaker US dollar will somewhat help it, but if there's fear in the market and sort of like people want us to be risk off, they don't buy Aussie. So in Aussie's best interest would be a 25 basis point cut, in my opinion. A 50 basis point, I think, is just going to freak people out too much, and they're just sort of going to go, okay, nah, look, let's hunker down and just sort of see what the fallout is of this. I saw a good post the other day. I can't remember who it was by on X, but it was sort of saying, it showed sort of all the other sort of cutting cycles. And I think sort of like he said something for like, I can't remember exactly, but maybe like 10 or 11 weeks on average after the cuts happen, no matter what the size of them, generally the stock markets enjoy it, they like it, they pump up because, cut for the right reason. So what would be considered a soft landing would be seen as positive for the stock markets because we're not in the sort of dire straits where it's sort of like everything's about to crash and burn. So we don't need to look for the safe havens. Hey, we're cutting. Hey, there's going to be more liquidity to go around, more money for people to invest. These companies are going to be able to pump up and expand out and increase profits a little bit. So that's in short sort of like a reasoning behind that kind of stuff. So if we see a 25 base point cut, I think the stock markets will like it. If the stock markets like it, then I think the general sort of flows of money and capital aren't going to be necessarily looking for safe havens. So that means that your yens and your metals and that aren't necessarily going to be sort of major breakouts. But it will help Aussie. So that's my feeling at the moment that a 25 base point would probably be the best outcome for Aussie moving forward. And we saw this sort of on Friday. So we had NFP come out, and NFP was an interesting one. So I'll just pop up the figures here. So NFP, let's refresh this. 114 was the previous. Where have we gone here? So 114 was the previous. It was expected to tick up to 164. We could see 114 was revised down to 89. That's a really low number. But regardless of it all, it did improve. So whether it was 114 and it went to 142, or as bad as this is 89, it went to 142, it was actually seen as sort of like, it's a bit of a grey area because it's below expectations of the forecast, but it's up from what it was previously. So I think this main sort of outcome with NFP was basically sort of like to make sure that the number didn't come in, 80,000. And because if we saw it come in super, super weak, that falls into the camp of, well, the Fed need to act and they need to act now. And that means 50 basis point. 50 basis point means that you see, like I said in a scenario 2 seconds ago, people will be looking for those other safe havens because you're not going to be looking for US dollar as a safe haven while they're cutting at 50 basis points. Maybe in time it'll look back, people sort of move it back to that once it sort of gets hammered a bit. But as I said, if they're cutting, the currency is going to be weakening. You're not going to want to put your 100 billion in something that's cutting its rates. You're going to be looking for somewhere else. But at the same time, the whole economy, in theory, in this scenario, would be falling apart. Well, let's really sort of hunker down and sort of get into those sort of safe haven places. So we saw it sort of, as I said, tick up a little bit, and so we didn't see major breaks. We didn't see major breakdown in DXY. We didn't see a major breakout in gold, for instance. So excuse me. So anyway, that's a little bit of a sort of background sort of scenario of the sort of more macro side of stuff at the moment. What I'm sort of thinking with Aussie is obviously we're getting down here with the RSI. This is on the daily now. I would say that we could potentially see a little bit of a push up early in the week, maybe a little push down, but I would be looking almost for a little bit of a doji to be coming in around this area. I wouldn't be surprised if we get something for a couple of days while the market digests things to this sort of effect. A little bit of a sort of a consolidation around here. I do think 66.40 will get a touch up. But I don't think necessarily we're going to get major breaks, back down to these levels over here. Maybe not at least now. I mean, as I said, we've got CPI coming this week, as we know is a big mover. Um, and these sort of things obviously can affect the market quite drastically. But I wouldn't be sort of expecting too much on Monday. I think the market's going to really sort of digest what happened going into the end of the week. So, as a sort of technical level with things, 4 hour, I wouldn't be surprised if we go a little bit. Generally, with these kind of setups, even if you are going to get a move back up, it's going to come down here and suck a little bit out first. So you get a long wick down here, but back up above 66.80. Uh, the wick high there, like above 66.82, we'll put the alert on. We could see a little bit of a push back up to these sides over here. As to sort of whether it sort of like can really sort of recoup a little bit, well, it's got a lot of work to do. So I'm not going to be sort of like looking to sort of like go in guns blazing too early. I think this RSI here needs to chill off, and this again, as this RSI can sort of like potentially sort of come back down towards these levels over here, and before it starts to move back up again, this could lead to a little bit of this sort of consolidation period through here as well. If we get a break of sort of like 66.40, then we're looking at sort of 66 as a round number. And that's a fairly decent pullback from the highs, because remember, we were just trading at 68.24 a couple of weeks ago, or a week ago or so. So, a 200-point pullback, sort of is offering a pretty good sort of, risk-reward entry for longs for this kind of thing. So I think we could be starting to see, some sort of basing. And I'll get to sort of why I think that is in a moment. Apart from the idea of it, as I said, just this little sort of technical setup here before we sort of get a little bit of a push to come back up. As to sort of what we're going to use as a breakout, like an actual sort of confirmation, I think it's going to be a little bit difficult. Like this sort of little push up through here, I think made things quite difficult. So I would be almost... I'll see how this goes. I'm not a big fan of this line. Obviously, we've only got one level. It's just the same angle as the top up here. We'll see how this goes, but I think we're going to have to wait to sort of see how this develops a little bit more. And as it sort of bases, then it can give us a breakout level above or a continued breakout level to continue moving down. But I think there's going to be a little bit of stuffing around before we get back long to sort of potentially get back up over here. Not till you get above these levels, and pretty much even this wick high from the other day, so 67.70, are we going to see any sort of true appreciation of these levels? So this isn't going to be coming anytime soon. So, there's plenty of time to sort of get your position sorted for this. Flip across, and so we got DXY, and this is what I've been sort of talking about. So came back down here, again, into this little buy zone. We've seen the buyers hold it here. We've seen the buyers hold it here. If we put it on the daily, we can see why we've got these lines down here, and these are those wicks from back in July and in sort of December of last year. So that's the third attempt the market's had to sort of come down through here. Obviously quite a sort of bullish reaction, which we kind of sort of thought, and this is what I put on X at the time, that sort of like, that wasn't necessarily dollar bearish. We did see a little bit of stuffing around in that because we had that sort of Fed speaker sort of come out at the end of the night as well. But you got to sort of look at this. It's sort of like, what's US dollar doing? It's not breaking down, yes, but it's not breaking back up either. I mean, look, let's see how this week pans out, obviously with CPI and just a flow on from last week's price action, but it's holding where it needs to hold. And as I said, cuts are still coming. So I wouldn't be surprised if we sort of see just really just a little bit of a stuffing around in this lower area down here. And this bides into sort of like, as I said, a little bit of Aussie weakness still to come and moving around here before it can sort of like decide whether it's going to break and actually break these major levels down here. But this is still very much in a very bearish kind of sort of setup. We're just seeing a bit of a sort of, not necessarily a bullish response, just not as super bearish response, if that makes sense. It's, by no means are they bullish. If you get back up above 102, then we're looking at what you consider a bullish response. You'd be looking at this thing that's pretty much, these kind of setups can potentially be known as high heel setups. Excuse me. You'd want to have seen this candle ideally have absolutely creamed through the top over here. You've still got the next couple of days, which potentially could lead to this thing, but I've covered this before. We do the brush thing, and this is the idea of it. It goes like this, and like that. And as you can see, with my crude looking drawing here, let's make it red or something so it stands out. That's set up there. So this is what's called a high heel bottom, and it's basically sort of like it's coming down, it's trying to go up, it's trying to push down again, but the response on this thing to make this a high heel is this stiletto looking, I think that's the name of it, the heel, whatever, part of it all. But this, for a completion, has to charge throughout the top side for this to actually be one of those sort of reversals. So, it's not yet sort of confirmed with there. It did have a little bit of a pushback off the lows, but again, I just don't think that was necessarily a response that sort of fills people with a lot of confidence to say, hey, you know what, let's keep buying US dollar, because again, cuts are coming. So it's going to put a whack on it, despite whether it, maybe they have the cuts and it sort of comes down here and maybe it shoots up again there and we don't get the major breaks through the lows down here. But whatever happens, when they sort of announce and they cut, you're going to get a bearish response, even if it's just for, half an hour and then it flips and the market goes, okay, that's what we're waiting for, buy the rumor, sell the news kind of responses. You are going to see that sort of reaction. So I think at best at the moment, we're going to be sort of seeing it between this 102 and 150 level. But at the same time, it didn't really break out to where you're sort of like going, okay, yep, it's going to be flying through. If it gets above 101.50, this sort of area here, we've seen has been a fairly, a repeat sort of section here. We can see that the sellers tried to hold it here. Buyers tried to hold it, buyers tried to hold it. This is the area, again, that we'd be looking for the sellers to sort of step in. And again, this is what could give, as I said, with that Aussie, just come down, hit 66.40, we get a touch up here, and then it kind of rolls back over and comes down here and just finds it sort of consolidating through this sort of period, something similar to this. But this isn't confirmed yet, so I wouldn't be putting there, but to give myself any sort of lines. So yeah, look, the response is kind of, it's not a shocker. It's just basically, look, it is what it is, and the market said, okay, well, we're not blowing up the US dollar today. That's fine. People sort of thought, look, if either it's going to break and it's going to come right down here. It didn't. Okay, let's readjust the positions and readjust the books and have it bounce back up a little bit. Like it's sort of like, it's not a sort of a situation where everyone's like, okay, let's everybody pile on and let's get on board and really rip it up here. There's no catalyst. There's no real reason for people to be buying it. So this reaction here is more just the people that were probably sort of looking for a big, massive payday as a big breakdown here. That didn't come, so they get out of their positions, which leads to, if they're short, they sort of get out of those positions, which leads to a little bit of buying and keeps it off the lows. There's no real sort of thing or element to it at the moment, to me anyway, till we get above 102 that says that the US dollar is back in action and back in the buyer's seat. So I think this is still just a sell the rips kind of setup at the moment. Above 101.4, no, look, I'm going to leave it there. Above 101.50 for anything topside. If we see a little bit of a dribble back down here and really sort of come back down towards these lows, then, you might see something happening. But again, we've got CPI coming out. I wouldn't be expecting anything major prior to the CPI. Flip on to gold, because gold was another one that I sort of was shorting into that sort of news period. I got off a lot of mine. I did actually pick up some longs down the bottom as we came into this support area. As you can see, it's like clipped it pretty much to the cent and had a little bit of a sort of little bounce off the top here. So again, a lot of the market was positioning itself. You can see this breakthrough here. This is the market, dropped down, picked up again. The market was positioning itself for a major break. Because look at how many times we've hit this level here. It's coming up to the top. US dollar is about to fall over. It's about to be blown up. You know, gold's over here. It's primed. Like once we see, as I said, once we see that sort of destruction of the US dollar or panic stations, either or both, gold is expected and will most likely be the safe haven of choice and the one where people see yields, and that will give it its breakout. It went up, it tried to sell down, it held up, it held up, it held up, bang, got here, and it didn't happen. Whoop. And it didn't happen. And so what do people do? They go, well, you know, it's not breaking out. I had all my positions. It's Friday night. We thought the US dollar was about to get blown apart. I had all my positions set long for going to 2600. That's not happening. Okay, I'm getting out. And then other people get out, and other people get out, and then blah, 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 and they sold the soul down over here. So that's all I think that was really happening coming into the end of that week. Like the moves do look somewhat dramatic. I mean, if you look at this gold here, I mean, really, that's a swing. This is the consolidation area that we're looking from. You're going like from what 25.30 to 85, so it's a $45 drop off or thereabouts. They look dramatic. But again, even if you look at the smaller structure here, this could just be seen as a back test of the breakout area. I don't really sort of buy so much of that. I'm probably more in the camp of, these horizontals for the time being. But the point is, as it goes to breakout, so with a breakout, particularly through these consolidation areas, it's better that it hit this area and sold off than had it sort of gone up here, had it sort of broken out and then come back. That would be a very different story. So if we'd seen a sort of like a big sort of bullish candle go out the top like this, and then we saw something to this sort of effect happen straight after, that would be a lot worse than what we're seeing here. What we're seeing here is the market respect the levels. It's respecting the chart. And that means, the game continues. You can see up here, they respected it, came down here, respected it, and consolidation on it goes. Once you have this attempt here and then go, okay, yes, here we go, we're breaking out. And then the market go, okay, we're breaking out. Well, I'm just going to do that, and bang, they sell into it. This will generally result in this. A big move to the downside. So it's better that it's sort of actually rejected at 25.80, 25.30 or thereabouts, this resistance area where we know sellers are. I mean, we've seen them again, time and time again. We've seen them in this level. So it's better that they're just saying, no, let's keep it here, let's keep it here, let's keep it here, than it be overrun here and then be hammered. This is a false breakout. A false breakout is worse than just the continuation of the channel. So, I mean, that's really, it just sort of means at the moment that there's a higher chance that we just sort of maybe get back down and we just start sort of consolidating this lower level. I think the levels are fairly solid at the moment. Like I said, we've got this sort of 25.06, 25.07 as a midway. We've got sort of like 84 to 74 as the support areas. And we've got sort of 25.30 as the breakout here. So really it kind of means if we break down below 24.70, we come down here, that's fine. We will buy more, but we won't buy it straight away. We'll wait till we get down to 24.30, and then we'll buy it as a little flip to sort of get back up to the top side over here. But for the time being, if we get above 25.30, then we're breaking out up the top side there. So I think realistically, gold's just going to be seeing consolidation. I don't think it's doomed. I think it's just really just back to trading the ranges till we see anything a little bit more substantial, like news-wise from US dollar and the Fed, basically. Flip across, got silver. Took a walloping. Geez, I really didn't think I was going to get any more buy options for silver. I did pick up a couple down the bottom here, as per my sort of little post on X and that. I'm going shopping. So I did pick up a couple down the bottom over here. Again, look, this is a pretty ugly sort of sell down. And these sort of things are really, you know what I mean? They're pretty tough to sort of see these things happening, particularly if you're long, or particularly if you're sort of, you know, trying to get these positions where you buy and hold. But as you can see, anybody that bought this 61, this is a great sort of bounce that we saw last week. Off the 61%, I mean, look, from the lows there to that move up there, there's a 5% move. That's awesome. I mean, if you've sort of got long and just held this, wow, you're doing really good. And then you put your stops to even, and all of a sudden you're out. Well, that was fun, wasn't it? You made zero. Maybe you put your stops up here. Maybe you trailed them very well. Good on you. But most likely, you know, these moves here are just to sort of get out the people that sort of got into it early and then sort of like come back down and then sort of clip them just from the bottom. You don't even have to have got in from all the way down here. Maybe you got down here and you put your stops down underneath here and you're like, yeah, I'm safe. Well, no, you're not. Bang. And it got hit out. RSI says it looks still has a little bit of work to do. Again, if we see some downside early in the week, I think we could probably be looking sort of back down at these lows over here. So I'm going to put this at next little buy zone is going to be pretty much in line, sorry, with these ones over here. So I reckon just along this zone over here would be our next little level to sort of add to some potential sort of bounce long positions. People will be saying, why are you trying to buy it? It's obviously coming down. Yes, but again, you've got to look at it. Here's your breakout. Here's your breakout here. Here's your retest of that breakout level. And really, this is the move that I'm looking for. This is a move up. Here's your pullback. I'm looking for this big move coming through here, which will sort of come into contact with this larger falling resistance, which will sort of keep a little bit more on the level, something to this sort of effect here. This one's zapped for now. So, yeah, look, if you get down below this earth, below 27 is going to be pretty tough. Certainly below 2650, you got to start to think that, okay, maybe this is just the next leg to move down even lower over here. But given everything happening at the moment, I don't feel that that's really the camp, and I'm still happy to buy some silver on these sort of pullback moves, particularly when you see these large pushes down like this. Most of the time, you'll see this move undo. It'll come back up. It may take a little while. It may dribble down here first, but it'll dribble back up over here. It'll hit this level here at 28.65, 28.70, and then it'll say, let's just put something here. Let's make you a little price target, and let's make you a little buy zone. Most likely you'll see this come back up, swing back up to this area here. So get rid of this one. Maybe dribble, maybe do something like this, whatever. It doesn't really matter. Back up here, but eventually it'll go boom, 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 hit here, and then sort of sell down there. So main thing to take away from this is that when it comes in contact with this and undoes this little move here, you'll see a little bit of a sell down. So that's why you put your price target there. That's why if you're getting longs through this period here, you don't necessarily expect it to go all the way straight away, but most likely you'll come up here and you'll see some reaction as it comes back into here. But again, you know, this is a big sort of drop down and it's a big wipe out kind of move. There's going to be a lot of people that are hurting from that. But yeah, there's got to be a lot of people that are just sort of sitting there waiting and going, yep, that's fine. I mean, I could have bought it for 29, you know, 2 days ago. Now I can buy it for 27.60. Yeah, to me, that sounds pretty good. So we'll see sort of how that goes there. But again, look, you know, it is a big sort of bull candle down here. It did sort of like manage to rally a little bit into the close of the week. It didn't sort of continue all the way down, consolidated a little bit here. And you can see that this is another area where we've seen buyers. So I'll make this a little zone. And this is what I say time and time again. You just got to look at sort of where's the price action, wherever the buyers. So the buyers are here, the buyers are here. Lo and behold, the buyers are here again. Had you sort of sorry, not had you, should you sort of break down through these wicks over here, well then fine. You can look for, you know, another 60 cents or so, 50-cent move down here before buyers start to have another shot again and try and get it back up again. So I'd sort of, again, you know, see how the week opens up. CPI is going to be a big driver for things, so it's worth keeping an eye on that. In saying that, with CPI, let's see, what are we looking at? CPI here, 2.9 going down to 2.6. Wow. Um, Look, it's hard to sort of say whether they're going to be hitting that. I mean, yeah, I don't really sort of trust a lot of the US data anyway. But again, you got to trade the numbers that are sort of presented to you. So if they say it's going to come in at 2.6, well, that's what the market's expecting. So above this is going to have a certain reaction. Below that's going to have a certain reaction. Whether that's truth or not, that's what the market will do, and they will trade off that. So let's just jump back onto where were we over here on silver. So 2.6. So again, look, if we get low CPI, so low CPI means, okay, well, the focus, as we know, pretty much is on the sort of recession side of things. I think we may need to look for some other bits of data as well, because inflation is obviously well back into their sort of target area. And I would say that maybe the sort of like the 25 basis point cut would be more on the cards. And as I said, I don't think that the 25 basis point is going to be as drastic for the markets as the 50 basis point would be. So that's we'll have to sort of follow up that a little bit closer to the time of the print as well. Flip across. Actually, sorry, quickly, let's just go back here. So as I said, for silver, look for it to sort of hold this sort of support area in this 27.80 area. If we break below that, I'd be looking around this sort of, another 40 cent drop off down into this green zone here, maybe down to our buy zone, before a little bit of a rally attempt. But I do believe that this move is going to be coming here, if not even a more, to be sort of coming up to the top side over here. I think the market is wanting to break out, particularly with gold. But I think the market's also, going to, by extension, move silver. It just needs the catalyst. It just needs the spark. And that's what I was saying, because you saw DXY almost break, but it didn't. You saw gold almost break, but it didn't. But the market is positioning itself, and that's telling you that the market is getting ready for that move. It just didn't happen Friday. And so they took their positions off. But it doesn't change the overall narrative. We haven't broken the major levels that we need to break to see further reversals. So we'll be playing that sort of coming into Asia this week. Copper, right back down into that buy zone again. And this is what I was saying. That comes up to this area. Actually had two attempts through here. We had a second attempt coming up through here. And bang, down again. So this has obviously come down deeper than, kind of thought. But again, we're back into this little buy zone. I had an order sitting around 60 or so, around 64, 60 or something like this. So 460, I don't know. It's around this area, 460, 470, around this sort of area, which I honestly, I was just like, no, I'm not going to get that fill. It's wishful thinking. And it has. It's come back over here. And maybe next week it's all the way down here. And I'm like, well, yeah, I could have waited a bit longer. But, again, time being, we know the sellers are sitting here. We know the buyers are sitting around here. So this has now become our little area, our little battle zone for where the market is going to be moving copper. You break down below 404, and then, again, we'll probably, I don't know if how much longer they're going to respect this falling resistance for. It could see some little reaction, but again, I wouldn't be surprised if you get back below 4 even, and maybe into the 390s before you see another rally attempt. So be watching out for taking out the lows here. Taking out the lows. RSI says it does want to go down a little bit further. That's 2 4-hour candles with a bearish kind of close looking there as well. So it's not looking like it's about to necessarily stop. So I guess minimum a little bit of a follow through early in the week. If not a complete sort of next leg down to around 4, that sort of round number. And finish off with China. China sort of held that double bottom status here. So what we're looking at here now is obviously sells down, and this is what I say time and time again. Finds resistance, finds support, moves up, finds resistance. That's right, it's on cue, comes down, finds support. This is the middle leg that we're always looking for. This is the one that matters, because this one gives you the lower low, which is the continuation, or if you're moving up, it's a higher high, or it gives you the higher low, or it gives you double bottom. And in this case, it's decided to come up with a double bottom. Again, market was looking for US dollar complete destruction. It didn't happen. So people take their positions off and reverse it. It hasn't broken any key levels to say, oh yeah, this is bullish now. This isn't bullish till you get above 720. I mean, even if you get above 715, just to get above these sort of previous highs over here. That's still not necessarily bullish. It's short-term bullish because you're putting in a higher high here, and you sort of look for a big sort of double bottom move, the double bottom sort of measured move like this. But look where it takes you to. Even a completion of this double bottom measured move comes up to 720 or 719, this area that we've already got marked out. So, again, if US dollar decides to spark a little bit of buying frenzy, we could be seeing a bit of a move up over here. We could see this sort of growing back up through these levels. This looks to me like a fairly decent little channel that it seems to be respecting quite a number of times through here. So again, if you get above here, I'd be calling this, because these are all so close together. I wouldn't say just get above here because you got a horizontal right in front of you. You get above this level here, we're going to say short-term recovery on the one, or on USD one. Doesn't mean that it's sort of like changing the course of everything and it's just going to be going all the way back up to 726 or anything like this. But that's the level. If you want to sort of say that, hold away, we're going to be seeing something different here, that's the level you'd want to beat. You can come out of this little sort of channel, but as I said, I think you've just got quite a few layers of resistance through there that you've got to sort of worry and deal with. So I don't think that's necessarily going to be a big buy opportunity. And look, maybe it does go up here, but who knows? I don't know. I'm just reading off what I see on the charts. So that's pretty much it, just for the weekend sort of review. A couple of little, I guess, honorable mentions with these kind of things was a couple of the equity markets. So I don't really cover these normally, but as I said, particularly at the moment with this big sort of lot of news coming up, we're seeing a lot of jostling around the market. And this is the thing that I actually put up on next. Like, as I said, I chart it. I've got a couple of guys that I know that sort of trade this. This completed, it's sort of, I guess it's kind of like a bear flag. It didn't really, it's kind of stuffed around a little bit here, broke down, retest, bang, came down into this level here. So that is an absolute precision measure move sort of coming down into this zone. And as you can see, it's still on the 50% pullback of this area. But, it's just offering a better risk reward potentially if people do want to buy it up. But as I said, the post that I saw on X, which I'll have to sort of find and sort of be able to quote a little bit clearer, was saying that of the previous cutting cycles of the Fed, it's generally seen about a sort of, I think, 11 or 12 week sort of almost honeymoon period where there's more money in the market, everybody's happy about it all, but inevitably it kind of crushes. So what this could potentially sort of add to is something to come back up here, take out the all-time highs, and then come down like this. That's major forward thinking, but sorry, that would be just above here, wouldn't it? Just above these highs. But that's definitely a possibility. You got an election year coming up as well, remember, and they're going to be wanting to do everything to sort of make it look like, oh, yeah, the stock market's going well, so we can sort of say that everybody's fine. But obviously, things are probably pretty far from fine. So we'll see how that goes. In terms of the news, quickly, coming this week, we've got a pretty quiet. No, we got CPI and PPI for China on the Monday. Nothing really got sort of consumer sentiment and business confidence for Aussie on the Tuesday. We've got a bit of trade balance stuff for China again. So a little bit of China news early in the week. These are kind of the things that definitely play into its pairs. That, by extension, remember, will affect the Aussie. So it's one thing to sort of keep an eye on with that kind of stuff as well. But as I said, big one for the week is going to be the CPI on Wednesday night, 10:30 Aussie time, Melbourne time. Expecting a tick down. I'm surprised. Like, I'm shocked that they're back at 2.6. Well, 2.9 now, but expecting 2.6. So if that number comes in flat, it's going to be maybe it's going to be seen as a dollar bullish. It's funny because I say to sort of people, you can get the same kind of data as in like, CPI coming down, but given everything else that's happening in the markets, it could certainly result in a different response. So it's you got to be in tune with things to make sure that sort of like when these things swap and good data is actually good and bad data is actually bad, and it's not that bad data is actually good. that's a very sort of nuanced thing. But yeah, you got to be certainly in line and ready for those sort of swaps, because otherwise you're positioning yourself based on, oh, well, US dollar will do this, markets will do this if this number comes in. In fact, it's actually different and you get absolutely walloped. So that's the big one for the week that people will be looking for. CPI. We got PPI, which is the producer price index coming out, which is actually looking to tick up just a little bit. That's coming out on Thursday night, and then sort of pretty quiet into the weekend, and China doing their thing on the Saturday. So, yep, we'll see how we go. All right, that's it for me.